Yo, what is going on, guys? In this YouTube video, we are going to together backtest the NASDAQ or NQ, E-mini NQ futures contracts, the silver bullet strategy for the entire month of August. So we're going to do it a little bit different. We are only going to look at the NASDAQ futures and the silver bullet morning session hour. So we're going to be looking at the 10 to 11 a.m. New York Standard Time AM session silver bullet hour. We're going to be looking at the 1 minute time frame, and we are going to keep track of the win-loss record and the point totals that we are going to gather from trading during this time. So without further ado, let's get into it. So here we are at the first day of August. We have Tuesday, August 1st here, looking at the AM silver bullet hour, 10 a.m. Eastern, and just waiting for our silver bullet trade to form. So what I want to see first and foremost is I want to see price create a liquidity sweep and then a fair value gap with displacement for our entry. So, here we can see that price does go up and take out this internal buy side liquidity right here, just looking at regular trading hours. But however, we displace lower. This would have been a fair value gap entry, but once we take out this low, I'm no longer interested in this entry anymore. So I would have wanted the entry to come inside of this fair value gap before taking out the sell side liquidity low right here. So once this low was taken out, I am viewing this now as my potential run on sell side liquidity. So I would mark that out, delete this, and at this point what I'd be waiting for would be for price to actually give me a fair value gap with displacement back in the opposite direction. So here we see price finally starting to turn. We have this bearish fair value gap. We'll see how that ends up respecting. It still respects, pushes price a little bit lower, and still waiting for that move back to the upside with a good fair value gap for us to be able to actually find our entry. So right here we actually do have this fair value gap as we're starting to break above this order block. Marking this out, this would be potentially good fair value gap entry for silver bullet on NQ. What I would do is you could put your stop loss below this low. I wouldn't personally, because this stop loss is 27 points. So that's a little bit too heavy for me personally. What I would do would be just use the 3 fair value gap candle sequence. You could get away with putting your candle, your stop loss right below the fair value gap candle. To me, I don't really enjoy doing that unless I have to, but more often than not, if I can, I would like to at least be protected by, this candle's low. So here we got a 16 handle stop loss. And what I would do is I would go for about, a 20 handle or so TP1. So 20 handles to 25 handles for a TP1. ICT says that comparing NQ to ES, 5 handles is equivalent to about 20 handles on NQ. So that is how you could do it if you so choose to. Just for sake of this video, I'm going to go ahead and target opposing liquidity. So right here, opposing liquidity is going to be this high right here. So this is a 3, almost a 1 to 4 risk reward. This is a 60 handle TP, and let's play this out, and then we can see what we get here. So let's see if we get tapped back in. So the very next candle, price taps back in and then works to that upside. Wow, nice reaction. And then we do end up taking out that opposing liquidity. So boom, right there, you'd be one and done. So August 1st, you would put a W for that, and then we would put a 60 point TP. So boom, there's August 1st, done and dusted. Now let's move on to August 2nd. All right, here we are, guys. August 2nd, Wednesday, 10 a.m. silver bullet hour. And right here, one thing I'm observing right away is it looks like during this macro, we did have one punch below this sell side level. So I would be interested in potentially getting long here. I would like to see a little bit more displacement. I do notice that we do have a fair value gap right here as we did break above this order block. So because we took an entry similar to that on the previous day, I would be okay taking this trade. However, the problem is this entry is being offered before silver bullet hour at 10 a.m. So therefore, if we are following the rules, we would not be taking this trade. And therefore, once 9 a.m. finally does come around, I would just wait. I would just hold off and wait on this. I would not take the trade just yet. I would actually prefer to wait for another fair value gap entry to the upside because I would want to avoid this. I would want to avoid getting stopped out, entering before the actual silver bullet hour and then seeing if this is just another run on liquidity before making a move back to the upside. So it looks to me like we did just displace lower right through that low. So that was a good idea to wait. But at this point, we've taken out sell side liquidity, and I would like to wait for price to displace up, giving us a solid fair value gap to enter off of. Right now, it doesn't look like we're getting much. Just looks like there's potentially more sell side being offered. So waiting to see. Yeah, it looks like we're continuing to just sell off. Still really nothing for a good entry, and now we're at the end of silver bullet hour. So it looks like Wednesday, the 2nd of August, was no trade. All right, guys, here we are. So August 3rd, silver bullet hour, looking at NQ here. So playing this out, and first thing that I am noticing would be that we have a fair value gap right here on NQ, and it looks like we are currently headed for these levels of buy side liquidity. So I would be okay getting a silver bullet entry right in there, as long as we got this entry offered to us before we took out these levels of buy side liquidity over here to the left. So what I would do, this would be actually a scenario where I would probably put my stop loss just below the fair value gap candle low, because if I were to put it all the way below this 3 candle sequence, you can see that my stop loss would be well over the allotted 25 handles max that I like to go for on the 1 minute chart. So I would just go like right below that candle low, and I would look to target opposing liquidity right up here at about 63 handles. But again, if that high gets taken out first, I'm going to just forget this trade and not worry about it. So I see price is starting to work down. We tap into that fair value gap. Let's see if it holds. And it does not hold. And it does continue lower. So for right now, I'm going to mark this as an L. Stop below that candle low. We are looking at a 19 handle stop loss. So we're going to minus 19 for that. And let's go ahead and delete this to keep our chart clean and see if there's any more trade opportunities. At this point, it looks like we are displacing lower. It looks like we could be headed for this sell side liquidity level right down here in the form of these lows. So right here, if I was to look for a good trade setup to get shorts, you could look at this fair value gap right here, and then you could set up your trade around that idea. So I would put my entry, boom, right there, and stop loss would just go above these candle highs. You could use the fair value gap candle here. What I would like to do is include this 1 minute order block. So I would just have, we'll call it a 25 point stop loss, and then this would be a solid TP1, or you could TP altogether here. It's almost a 1 to 2, about a 1.7 RR. And let's see how this trade plays out. So let's see if we get that entry back in there. Once that low gets taken out, I would no longer be interested. And boom, price does get close to that low. It comes up to that fair value gap. So far, it doesn't look like it is respecting it whatsoever. And then we, boom, go and take out stop loss and see what we do from here. Looks like we kind of just chop back and forth in this range. So it looks like if you were playing this aggressive, I'll be honest, taking this entry would be kind of aggressive. But if you're looking at this as, you know, an area where price is looking to disrespect bullish PD arrays and then just look to seek levels of sell side liquidity, you can see that you kind of would have got chopped up here. So I would have to actually include this for 2 L's, and this would be minus, we'll just call it 25. We'll keep it simple here. So minus 25, minus 19 on the 3rd of August. Not good, guys. Not good for this day. So that's okay. We'll delete that, and we'll move on to August 4th. All right, guys. August 4th, loaded up, ready to go. So let's see what we get during this silver bullet hour. So looking to see what price is going to do as of right this very moment in time. It looks like price is wanting to take out this level of sell side liquidity right down here. So I would want to wait for that to get hit before looking for any trades. So once that got taken out, now I'm looking for displacement with a fair value gap for an entry to the upside. Here we go. Got a nice fair value gap right here. And this would be where I would look to find my entry to go long. So I'd like to go long right inside that fair value gap. And for me, I would put my stop loss probably right below this candle's low. So I'm right below the 3 candle sequence, about a 25 handle stop loss. And then I am looking to target opposing liquidity. That would obviously be up here in the form of these highs. So you could target those. You could do a TP right here at this high. Obviously, you could do a TP right here at this high. So for this example, we'll target this entire price leg up as kind of a TP 1, 2, 3, because this is a great risk to reward, targeting a full almost 150 handles, which would be pretty crazy. So you could definitely afford some partialing in there. It looks like price comes down, just barely taps that entry right there. Let's see if it shows respect to it or if it's actually going to sell off and continue lower. Looks like so far so good. There we go. So TP1 got hit right there. That's great. And then let's see if we do end up working all the way up. And it doesn't matter, guys, as long as the trade is triggered in before the silver bullet hour ends, this is totally fine. You can hold these trades to the close of the day if you wanted to. So let's just trigger this or trail this and see if it triggers the final take profits. And boom, it finally does, guys. It does give you that full 150 points offered here, just to measure these out, you know, for your guys' own journaling. 57 points to TP1, and then you got 105 or 105 right to TP2, and then you've got a full 147 all the way to TP3. So that's great. That's fantastic. Let's mark this out as a W, and then plus we'll just do 147. Obviously, this will vary based on if you took partials or anything like that. But just for sake of the backtesting video, guys, we're going to keep it just like this. And I will fast forward. This was Friday, August 4th, and we'll fast forward to the next trading day in August, which I believe should be the 7th. All right, guys, here we go. August 7th, Monday, brand new trading week here. Silver Bullet Hour AM session. Let's see what we get. So right off the rip for the Silver Bullet Hour, we see price taking out what looks like the opening range low. Would like to see if this provided any sort of a reaction or if this was just going to continue lower. As of right this second, nothing really to go off of. What I'm noticing right here is that we displaced through this low, left a fair value gap. Right now, this fair value gap looks like it is getting disrespected, and there's a very tiny fair value gap right in here. I'll be honest, guys, this would not be a trade that I would take personally because there's no true, market structure shift with this. However, this could be a scenario where maybe you just tape read this setup and just see how it plays out, see if it respects it. So that's what we're going to do for this one right here. Let me go ahead and make sure I mark the very end of this Silver Bullet Hour just so we have that pointed out. So right here, looks like price does tap into that fair value gap. And if you were taking a trade, whether it be lighter risk or whether it be, tape reading it, or whatever it might be, right? Your stop loss would probably go actually below the low. You could do that if you wanted to. That would be a full 19.5, almost 20 points, and then you would just target opposing liquidity in the form of any of these highs up here. So we can tape read this, guys, but like I said, I don't think this is a trade that I would actually take personally, but we can see how it plays out. So price does tap into it and then does actually displace up. So at this point, I would feel a lot more confident in this trade than I would this initial entry. It looks like it is playing out though. And we'll tape read both of these just for sake of the video, guys. And then you guys can kind of see how, what decisions you can make with this going into obviously applying it for the new week. And then we'll go ahead and make a makeshift second position here and see if it does get tapped into this. My stop would go below just the fair value gap candle in this one, guys. And then still looking to target that same opposing liquidity. Oops. So let's go ahead and play this out and see how these respond. So price does tap into that entry as well, and then price does work to the upside. Boom, hits TP1. So this would be TP1 regardless of position for me, at least risk free probably. And then it looks like price does tap into that. This second position probably would have been stopped at break even right there. And then that last trade, yeah, that got stopped at break even as well. But TP1 was hit regardless of the entry that you took. This first trade would have offered you a nice 60 points. And then this second trade would have offered you a nice about 34. So I'm actually just going to consider that a win, but I'm just going to give myself credit for the one that I actually feel like I would have taken, which would have been the 34. If you guys felt like you would have taken this one, let me know. You definitely could have. I will say this would be a trade that I would take if I had SMT divergence at the lows with ES. Obviously, for the sake of this video, we're just looking at NQ chart only, so we're not really factoring in any SMT divergence. But I will say, if there was SMT divergence, I would take this. Okay, so I'm going to put maybe in parentheses that maybe we could have gotten 60, just depending on the entry that you took, right? So I'm going to put in parentheses plus 60 because maybe you would have taken that. Okay, so I'm going to include it just for the sake of the video because we're gonna add all this up at the end and see how the performance was going off of this. Okay, so let's fast forward to the very next day. All right, guys, here we are, August 8th, Silver Bullet Hour. Here we go. Let's see what we get. Price pushes lower, takes out sell side liquidity during the macro and right at the beginning of Silver Bullet Hour. Let's see if this gives any sort of displacement back up. so we can find a bullish entry. So boom, there we go. Let's see if we leave a fair value gap right there. We do. So we do leave a fair value gap. Sorry, I skipped ahead a couple candles too quickly there, but this would be where you're looking to get in. So right here, you have the liquidity run, you have price displacing up, fair value gap over top this order block, beautiful, with a nice little market structure shift above these highs. Okay, so this would be a valid setup in my opinion, using pretty much the 2022 model for the silver bullet setup. So what I would do with this trade, personally, I would just go below the fair value gap candle because we've got too big of a stop loss, in my opinion, to go below the low or even the 3 candle sequence. So I would just be fine going below the fair value gap candle, 17-point stop loss, looking to target opening range high or opposing liquidity. And then this would be that TP right there. You could TP in the middle right here at this fair value gap if you wanted to. We can mark that out just for good measure, and it'll be up to you guys how you want to manage your position. So I'm just kind of trying to cover every base here depending on your trade management style. Might not matter here. It looks like price does sell off one more time. So this would have been a loss of minus 17 handles. Go ahead and mark that out. Loss minus 17. But let's see if we do get another entry opportunity here. Obviously this fails, and one thing we would want to wait for here would to see if price does start disrespecting these bearish fair value gaps and starts working to the upside, giving us a break of structure or a market structure shift back up. So right here, looks like we have one more opportunity here. We do get this market structure shift above this high with some nice candle closes, and we would look to target this fair value gap. And what that entry would look like right here, stop loss. Let's see, we could get it below this recent low. That's perfect. And again, looking to target that same opposing liquidity. We just need this to trigger before the silver bullet hour ends, which it does. And it looks like we are going to get some respect initially, and then looks like we sell off even lower. So looks like this would have been a pretty tough day. You know, we took out opening range low. We looked like we wanted to work up. So this probably would have been a couple of different losses. Both of them would have been about 17 handles or so. You guys can see this is about 17 and a half. So I'm just going to mark it as another minus 17. Minus 17 handles. So minus 34, even an 0-2 on that trade. All good on the 8th. So we'll look forward and we'll move ahead to Wednesday, August 9th. And here we are, Wednesday, August 9th, silver bullet hour. Let's see what we get, guys, around the 1 minute time frame here. So we see price immediately push to the upside, and it looks like during this opening bell, from opening bell, which is 9:30 New York time, we saw price dump. This could be your Judas swing. Looks like it did take out sell side liquidity from over here. So we took out that sell side, very shallow breach, but we did indeed take that out. So right here we see price displacing back up, and I would look at this as our market structure shifts or our break of structure back up, and this would be a valid entry as far as I am concerned. So boom, right there is the entry, stop loss below these candle lows. Let me make sure I have the actual low here. So right there, the low of that candle wick right there, about 17 and a quarter, nice. And again, looking to target opposing liquidity, which in this case would be opening range high, which would be right here, but the PM session high from the previous day is also right up there. So I would just look to target these highs up here. For other take profits, you could use highs along the way. This high overlapping that fair value gap, and that'd probably be about the only one, guys. You know, but really once we get to opening range high, I would be pretty satisfied with that. That'd be about 76 handles even. Let's see if this gets triggered in, and let's see if it shows any respect. So price comes back right away, taps that fair value gap. Let's see if we respect it and move up, or if we just sell off right through. We do disrespect this order block, and we start working up right away. And let's see what we get. So price sells off one more time. Keep in mind, I did think that that was kind of a shallow breach of that low. So it's possible that maybe you would have not looked at that as a liquidity sweep, and that'd make total sense. So far, I'm going to mark this as L minus 19. I'm sorry, minus 17 for the first trade on the 9th. And we will see right here, now that we've had an actual run on liquidity where buy stops or sell stops were actually probably triggered, this would be more justifiable for a move back to the upside. Let's see if we get any good fair value gaps that we could use for entry. Yeah, guys, not really seeing much. Looks like it just wants to sell off even further. So yeah, I'm going to say this was just a one trade and done. If anything, and it's possible maybe you didn't take any trade whatsoever, you know, obviously you can say that there was an opportunity in hindsight here to keep trading NQ lower. But again, just going off of the NQ chart and going off of the liquidity that looks like was already taken, then I probably wouldn't be favoring getting short after opening bell already, you know, gave us a nice sell-off of over 100 handles. So just being honest with the back testing here, I genuinely don't think I would have taken this, but maybe you guys would have. And again, we're not factoring in any other bias or anything like that for this video. We're just going off of what we're seeing on this time frame at this hour with not a whole lot of bias included, guys. So it looks like we're not going to get any trades here. Price just sells off again for Wednesday, August 9th. So let's fast forward to Thursday, August 10th. All right, guys, here we are, Thursday, August 10th. Looks like we are now seeing price absolutely running to the upside. Let's go ahead and jump out to a slightly higher time frame and see. As you guys can tell, looks like price is taking these highs currently. We're inside of this opening range gap from earlier in the week. And I guess what I would like to see would see price give a strong displacement down in order to justify getting short. Otherwise, I think it is possible that maybe price will want to run for this level up here. So let's drop down again to the 1 minute time frame. We're going to keep that marked out, however, and just keep our eye on it and see what we get. If we get a nice market structure shift to the downside with displacement, good fair value gap, I will look to get short, but we'll keep an eye on to see if we just, you know, expand higher to that buy side level. So not a whole lot of displacement yet as far as I'm concerned. Still really not much. There we go. Now we actually have displacing price down. And here we have a fair value gap. And this would be a justifiable short entry. Right inside that fair value gap, boom, right there. Stop above the fair value gap candle high. If you wanted to be picky with the entry, you could maybe go 50% consequent encroachment because it does line up with this low right there. And then your stop loss, you know, would still have a little bit of wiggle room, but more often than not, you're probably just going to go right here with it. So I would put the entry right inside the gap, boom, about a 24 to 25 point stop loss. And then just targeting opening range low from current day, you're looking at over 100 points. So that's more than enough, in my opinion. And you have a fair value gap in here where maybe you could look to partial and just marking out like this recent low right here. This would be also a decent area to TP and partial as well. So let's see if this holds. Now that we got that displacement down, let's see if it even triggers in. Man, it doesn't even trigger in. And then we get silver bullet hour ending. So no trade on August 10th. Marking that out. No trade. If we zoom in here, you guys can see that this was never remitigated. This candle does not ever breach that fair value gap. After that displacement, pretty unfortunate, all good. And just to see how this plays out, let's see if it did take out opening range low. Yes, it did. Okay, so all good, just an opportunity missed is all. Nothing to beat yourself up over. We'll move on to August 11th. Alrighty, folks, August 11th. Let's see what we get. We see price immediately start displacing to the upside, taking out opening range high, buy side liquidity. So now I would like to see price show that it wants to continue lower, and it doesn't. It looks like we displace higher, breaking structure again with strong displacement, fair value gaps. So I would shift my bias, and then I would look to target this as the potential entry point. Or what you could do is you could draw up your gone box or your fib and see where equilibrium lies. Because this fair value gap is not in equilibrium, maybe you would opt out of this trade. However, one thing that I have noticed is that even if price doesn't return back to equilibrium, a lot of times when you see a fair value gap overlapping this breaker formation, sometimes it doesn't even give you the opportunity to get this lower fair value gap entry. So we'll actually back test both potential fair value gaps for that exact reason, and but we'll play this out here, not trying to skip too far ahead, but we can expand this up a little bit higher now. And now it looks like this fair value gap is working into that discounted price range for equilibrium. So, you know, back testing this, where would I take my entry? I would put it right at that equilibrium. kind of get the best of both worlds right there. And then I would put my stop loss right below this fair value gap candle. If you really wanted to be safe, maybe you'd go all the way at the low. For this example, I'm just going to go put it right here, 17 points, and then looking to target opposing liquidity, which is going to be basically the end of PM session yesterday, or you could look to target what looks like the highs of PM session from previous day. So we'll go ahead and just put it up there, and we'll mark out our TP levels. To me, TP1 would be this high because that's well over a 1-to-1. Looks like it's almost a 1-to-2. So TP1 would be here at this high for me. TP2 would be basically this high right here at the market close day before. And then PM session highs would be that final take profit for me with this trade. And we'll see what we get. That'd be a 125-point run. Let's see if it comes back and even picks up that entry for us or not. Looks like we did work up a little bit higher. So now that entry could actually be justified taking it a little bit higher. So what I would do is I would do just that, and I would put the entry right at the beginning of that fair value gap. And then I would keep my stop loss in the same place because it's still below that 25 points. So let's see if this does end up getting picked up before silver bullet hour. Yes, it does. We see that fair value gap getting tapped into. Currently, it's respecting on this candle. We'll see if that stays the case because we did come down there with some force, it looked like. So price does sell right off through, and ultimately we don't see any of these bullish PD arrays get respected, and everything kind of gets disrespected right down there. Looking at this, we have one more fair value gap on this price leg right here that potentially could play out. So just for sake of the video, I will include that in the video. So looking at this, stop loss for this trade would be able to go right below the actual low of the structure, and then we can see if this ends up playing out. It did trigger in before the end of the hour, so I wanted to include it. But if you took this initial trade, I wouldn't be trying to get in here. I'm just trying to make sure everybody that watches this is going to see this price sequence. And I know you guys are going to be saying, well, what about this fair value gap? What about that one? What about that one? Obviously, you guys can trade it however you see fit. But I would, if I took one loss on this price leg with all the logic that I had going into the trade, I just wouldn't mess with it anymore. I wouldn't take another trade. So I wouldn't count this as 2 losses. I would look at this as, regardless of which fair value gap you went long from, it all resulted in a loss, because ultimately this entire price leg that offered this displacement back up was disrespected. So therefore, there really was no great trades. Even if you were getting short anywhere in here, I don't see where you're getting short from, right? So you're probably not getting short at all. We're just going off this price action. Again, we're not taking any daily bias into it. So I would consider this a minus 23-point loss for Friday, August 11th, and we will mark that out. Loss minus 23 points. And we will move on to the next week. All right, guys, here we are, Monday, August 14th, AM Silver Bullet Hour. Let's see what we get. So price comes into Silver Bullet Hour. And what I would like to see, guys, is I would like to see this opening range high get taken out for buy side liquidity before getting short. So I'm going to wait on that. We just take it out right there. Now we want to see displacement, market structure shift lower, and then obviously find a fair value gap entry right here. It looks like price is still wanting to just push to the upside. So that's a little unfortunate. Still want to wait and see if we get that market structure shift with displacement lower, and we do. So in my opinion, I like the way that this formation looks, and I would actually take trade off of this. So I like the fact that we put in a nice 1-minute order block here that did take out some more buy side right here, and then we saw price with force leaving a nice fair value gap displaced below this order block low. Therefore, we have order block in alignment with the fair value gap. These are usually the setups that I really like taking. Would I have liked to see a stronger candle close on this candle down? Potentially, if you really wanted a strong market structure shift, that'd be nice. However, ICT talks about how you do not need a candle close to be considered a market structure shift. So this would be considered a market structure shift on this 1-minute time frame. Okay, so just going off of that knowledge, we would take our entry at the beginning of that gap. We would already be triggered in right here. And stop loss, you could get away with it above the high because it's below 25 handles. And then you would look to target opposing liquidity, which would be opening range low and I would look to personally partial probably at least one time right at these lows right there, and then leave that final TP for opening range low. So let's see how this gets. This might just disrespect and go higher, but we'll see which it does. Okay, so price does continue to the upside, minus 24 handles there. So the 12th loss, minus 24. And I would look to potentially replay the same setup only if price gave another great setup to do so. So let's see what we get. Might just continue higher here. It looks like price is just displacing with a lot of force to the upside. Yeah, so looks like this was just straight bullishness from market open to the end of silver bullet hour AM session, and so that would be just one losing trade for that Monday, August 14th of minus 24 handles. Moving on to Tuesday. All right, guys, here we are, Tuesday, August 15th, and I would notice that we already took out that liquidity here, but very well could take out the liquidity once more, because that would actually be our opening range low coming into the very beginning of silver bullet hour. So it looks like we got that right there. Price is still with a lot of energy displacing lower, jumping out here to a slightly higher time frame. I would look for other things that show that maybe I would look for other areas of liquidity that are being swept from previous days, or something like that. And I can see that this low is taken out. It looks like we're finally getting into a lot of this structure and this price action. So I would like to see how price responds after taking out this sell side liquidity and then digging into this structure, which is probably an order block on a much higher time frame. So I would wait for the same things. I want to see market structure shift up. I want to see a fair value gap with displacement, all that stuff before justifying getting long. So still waiting here. Don't really have clean and clear energetic displacement until right about there. So boom, we see price work up. We finally see a burst of energy, and we'll see if it leaves behind a fair value gap or not. So it looks like it will. Fair value gap left behind right at the very close of that candle. And again, very next candle would look to get our entry if we get it pulled down into there, and our stop loss can go below this recent low, because we have below our 25-point minimum, and then I would just target opposing liquidity, which for me on this day would be opening range high. Very simple. Opening range high right there. Another TP for me, another very pretty simple TP level would be this high right there before the break of structure lower, and this would be 19 handles for a stop loss. Let's see what we get. Boom, price just tanks. Takes out the low one more time. And then maybe, just maybe, there's another opportunity right there to get long inside this fair value gap. Stop would go below, for me, I would just go below this 3-candle sequence so we can kind of cover the top of this order block. Still looking for the same target, and let's see what we get. So boom, yeah, doesn't get taken out. You would have been stopped out here if you forced another entry. So for me, I just wanted to include both of them, but for me, once this trade got taken out, probably would have avoided it unless there was something on a slightly higher time frame. So I'm going to jump up to the 3-minute really quick and just see if there was anything else. 2-minute time frame. I'm looking for other fair value gaps in here, guys. That's what I'm looking for, essentially. 5-minute time frame, 4-minute time frame. I looked anywhere between the 1 and the 5. And if you wanted to be really nitpicky, this could have been obviously an entry on the 4-minute time frame. The problem is so that 4-minute fair value gap, notice how that gets tapped into and then we burst to the upside. So here's the problem, however, is this entry would have had to come before the close of silver bullet hour. So let's jump down to the 1 minute and let's see if that was the case. It looks like 10:59. Right before the close of silver bullet hour, there was an entry offered there. Like, that's how finicky this can be sometimes. And it's not fun when it's like that, but that is how it can go sometimes. This is trading after all, right, guys? So, 4-minute, jump back out. There's that fair value gap. I would have to use the 4-minute fair value gap candle as an absolute, most aggressive stop loss going right below that candle low. And I'm just putting this in here for sake of everybody's enjoyment, because I know that some people are going to, say I would have taken this, or I would have seen this, or I would have taken that. So I just want to include everything in there, guys, and just see how everything plays out, okay? At this point, I'd be risk-free for sure. Maybe you partialed already, once because we did take out a couple different highs, and then I would be holding probably until end of the day if I could, and have stop at break even. At this point, looks like price is just chopping back and forth in this range. Really not a whole lot more to go off of just yet. End of the day would be about 4:15. Well, obviously way back yonder over here. So we don't need to mark that out. We can just leave it. And we'll see how this plays out. Let's see if that ultimate TP1 would have been hit. Looks like you almost would have been stopped at break even right there. Very rangy day. Looks like ultimately you would have been stopped out at break even. Like I said, maybe you would have TP'd up here, gave you a potential of about 70 handles or so. For me, I would just say that I probably wouldn't have taken that second trade, and I'd be ending the day with this loss right here of minus 19 handles on the 15th of August. And here we are, 16th of August, Wednesday. So looking to see what we get. And we see price immediately start displacing down. And I would say that as of this moment in time, looking at this price action, where have we been and where could we be going next? It looks like price took out this buy side liquidity here on the 1 minute time frame with the opening range. And I would say that the next draw on liquidity is probably going to be opening range low at this point. So I think you could very well justify getting short right here if price does return to this bearish fair value gap, and I would look to boom, get an entry there, stop loss above the high, 16.5 handles, looking to target this liquidity right here, 42 handles and some change. Price does come back, looks like you would have been stopped out, and price does just continue to the upside. So L minus 16.5 handles, minus 16.5. And you can see how this was actually then used as inverse to then go to the upside, which is unfortunate, guys. So, looking at this price action, the only other alternative would be if you were bullish. Again, we're not using a whole lot of bias for this, so that can be tough. This would have been another entry. The problem is if you entered here, price took out this high, you're probably break free or risk free at break even. Well, you probably would have been triggered out at break even here. So I want to use this really as an entry. In another alternative universe, hindsight's always 20/20. Maybe you would have grabbed that entry there on that fair value gap. I can't say that I would have done that. I wouldn't have been looking at price in that way, but we'll see what we get here. Let's see what price does now that we've taken out opening range high. So we take out opening range high right there. And I would like to see if price does indeed displace back lower, market structure shifting, to offer an entry to get short and then target opening range low. So I'm going to mark out this fair value gap. Nice displacement down, fair value gap entry right inside of there. Stop loss could go above the candle high. I would just go above this sequence right here. I don't feel like going above this would be super necessary, truthfully. So I'd go right above that. We got both these inefficiencies covered, order block covered, 20 handle stop loss, and then targeting the opening range low, 69 handles. So let's see if we can get this move to play out for us. Price does tap in very, very subtly, but it taps in to that entry before silver bullet hour ends. And I would like to see if we can now displace back towards our draw on liquidity. Price comes up and gets very close to stop loss, and we displace lower once more. I'd like to see what we do. Can we get down there to our TP? No, we do not. So this would have been probably either a 2L day for me, or it would have been stopped out at break even right here. Now that I'm actually thinking about it, this was actually a break even trade for me live real time. If you guys go back to my live session from August 16th, once we had this second break of structure right here, I actually remember this. I remember that we went risk free, stop loss to break even, and got stopped out at break even on that. So you don't believe me? Go check it out. That's exactly what happened. And I know that because I know right after this happened, we tanked. Come on. There we go. Price absolutely tanked. And that was that, guys. So yeah, this would have been probably an L, and this would have been a break-even trade after that market structure shift, and that's exactly how it was for me. I didn't get long here though, or I'm sorry, I didn't get short here that day, but you can go back. Everything was recorded. This would have been a possible entry. But anyway, we already got it marked out, minus 16.5 handles for August 16th. Let's move on to the 17th. All right, guys, here we are, Thursday, August 17th. And let's see what we get here. So we see price does indeed take out opening range low. So we have that right there. Now we want to see price market structure shift to the upside with displacement, giving us a fair value gap candle. So here we have a fair value gap candle up, but there's no market structure shift here yet, guys. So I would not take this trade. That's not displacement in my opinion. And I would want to see a little bit more before getting long, because I feel like price could just keep flushing to the downside, which it looks like it's doing. So price is continuing lower, and we're not really getting that displacement back up until right here. We finally get that nice market structure shift above. What I would do in this scenario is I'd go from this swing low, or you could even go from this swing low to wherever this turns around at, and find your fair value gap inside of an equilibrium, inside of a discounted price range. So looks like there's nothing yet. Just checking these other time frames, and I don't really see a whole lot, guys. I don't really see a whole lot yet. Let's see if this does end up coming back before silver bullet hour even ends in the first place. So right here, we do have this fair value gap right there, and we'll see if that even triggers before the end of silver bullet hour, which it does. It does the very last minute of silver bullet hour. So this is going to be a finicky one. You guys can let me know if you would have taken this trade or not. I think it would have been justifiable to do so because we did return to this fair value gap. We did tap into equilibrium right at the very end of silver bullet hour, and let's just see what this does. Looks like we would have gotten very close to taking out this low. Odds are any entries, any stop losses in here would have been ran out. That's tough, guys, because it looks like the price does want to go higher from there. We'll see. Yes, it does. So you guys let me know. For me personally, no, I wouldn't have. I would have been wanting to get long from here, and there would have been no opportunities to do so. I don't think this would have been a no trade day for me personally. But you guys can let me know if you would have taken the trades. I'll show you the different time frames here. This is the 5 minute. You know, even if you use this 5 minute fair value gap, you know, with your stop loss below this fair value gap candle, you're stopped out. The only way you're safe is if your stop was here. So you guys let me know if you would have taken this trade, yes or no. Thursday, for me, August 17th, I'm going to mark that as a no trade day. All right, guys, here we are on Friday, August 18th, AM silver bullet hour. Price opens up silver bullet hour, and we take out opening range low. We take out opening range low right there. Now we want to see price displace up, give us a nice market structure shift, fair value gap, possible entry opportunity. So we're waiting for that. Still nothing yet. Price continues lower, takes out the low one more time, and now we're starting to see price actually show some energetic displacing price up. Nice market structure shift there, very obvious fair value gap right here, and then this would be that entry right here. As price pulls back into there, stop would go most likely below the fair value gap candle low right here, and then looking to target opposing liquidity in this case would be opening range high, and then you could hold a runner if you wanted to all the way up to there. But for me, this would be a very solid TP right there. Let's see what we get. So price does work up even higher yet. Let's see if we get this pullback down into there. Yes, we do. We get that pullback, and then price does expand to the upside and then takes out that liquidity. Great W on the 18th. W trade plus 53 handles. And then just for sake of the video, if you were holding a runner, let's see if you did end up getting anything even back to this opening range gap high would be over 100 handles. So let's see if price does indeed give that, or if you would have been stopped at break even. Nothing as of yet. Man, getting pretty late in the day. You'd have been holding for a bit. Just waiting to see if you would have got more out of this trade or not, guys. Boom. Looks like you would have been able to get back to that opening range low. All right, guys, here we are Monday, August 21st. So waiting to see what we get here. Looks like price is just displacing up so far during this opening range. Boom. Take out opening range high right here. And now we want to see if price does indeed displace lower and give us a nice entry opportunity. So we do see that price does market structure shift here. However, it looks like this fair value gap was already traded into. Maybe we would want to see if there's something on the higher time frames that we could utilize. As of right now, it looks like that same fair value gap is the only one possible that you could enter off of here on the 2-minute. But we would wait and see if there was anything else that did show itself on any of these time frames. So first trade we would anticipate would be this one. We would anticipate price to pull back to here, and our stop loss could go above that high, 20 points, 21 points, and then we would look to target opening range low. That'd be over 100 handles. Very nice. Let's see what we get, guys. Looks like price is going to continue displacing lower. And going back to that 2-minute chart, still looks like we're on that same candle. Basically what I'm trying to do here, guys, is see if we would ever use this fair value gap. For me, I wouldn't use this fair value gap personally. Reason for it would be because it is just not yet in a premium. So I would wait on that first fair value gap, guys. Extending this out. Now we're starting to see price work down into here, which is very nice to see. See if we start working back up, guys. Go into the 2-minute time frame. We do have this fair value gap right here. So what I would do personally with this trade is I would put my stop or my fair value gap, mark this here. However, I personally would wait and I would have my entry or a limit order put right here at equilibrium. And the reason I would do that is because then I could put my stop loss on the other side of this fair value gap candle. Okay, so that's what I would do personally, and this is how I would play this setup. Still looking to target the same exact opening range low. This looks like it could be a great TP1 right here. Otherwise, this would be the TP that I'm really aiming for, is this opening range low. So let's see what we get, guys. Let's see if price does indeed pull back. Wow. Does not look like we are going to pull back. So we're still on the 2-minute time frame. Let's go to the 1-minute. And we did not pull back to this gap at all. We did take out this low. I do still think that we will deliver to this opening range low. However, because we took that out, I would personally just opt to just sit out, even if it pulled back. We can continue tape reading and see what it does. But now that we've taken out this low, I probably would just chill and not take any more trades. But I do expect it to deliver to that opening range low, and it does. So it delivers there. And delivers kind of through it. So yeah, this would have been a no trade day for me on Monday, August 21st. No trade. Moving on to Tuesday. Alrighty, folks. Tuesday, August 22nd. First thing we are going to notice, want to see opening range low get taken out. Have not have that happen just yet. Waiting to see opening range low get taken out right here. Let's see what we get. Nothing yet. Still expect this to deliver there. Now that we've gotten 2 breakout structures to the upside, I personally would be okay seeing this respect and hold and then go ahead and take out this opening range high. So at this point, I would be okay favoring this as our draw on liquidity. It looks like we've got price displacing up. See if we go to the 2-minute time frame, what it looks like. So we see this 2-minute fair value gap here with this 2-minute order block right here. I'm giving away a little bit because it is tapping into it. Looking at this, how I would choose to play it, same as always, mark this up, equilibrium. I would not enter in this fair value gap. Why? It's not an equilibrium. It's not below the 50%. So the very highest I would take this entry would be right here at equilibrium. And then I would want my stop loss below the low. Why? Because we can fit all 25 handles in between here and there. So that'd be okay with me, looking to target opening range high. So let's see what we get. If price does indeed deliver to our entry, we got fair value gap above and below, and we got this 2-minute order block, which is very nice. So I would see how we go. Let's see if we trap in. We do tap into this lower inefficiency, so you could get a little bit more of a sniper entry. If you did that, that's totally fine. And then we'll see if price respects. It does not. So the initial analysis looking like it's probably going to play out here where we're going to take out opening range low first, which we do right there. It's going to count this as a loss, have to, minus 23 points. And at this point, I would look to still target out opening range high now that we've taken out opening range low. Boom, right there. We see price coming back up into there. Would like to see a little bit more. Not really a great market structure shift. There is a fair value gap in there. If you had SMT at the lows with ES, you could justify taking that. So for that case, I would mark this out just in case of that scenario, and you can keep that in mind for your forward testing or your live trading. I guess I would like to see a little bit more than that, preferably. But you can see that we are respecting these levels. Respecting them again. We've got another fair value gap opportunity right there. So at this point, to be more of an institutional order flow entry drill where you're getting in, noticing that order flow is bullish. Stop below here, and then looking to target opening range high. TP1 would be recent high. So let's see what we get, guys. Let's see if this trade does play out, because this does trigger in before the end of silver bullet hour. Very nice delivery. TP1 not quite hit just yet. I'd be risk free though at this point. And wow, very choppy all of a sudden. And boom, yeah, I would have been stopped at a break even. I probably would have made no money on this trade because none of the levels got traded to. So would have had one L of minus 23 handles back here, and then this would have been a heartbreaker because that would have not been triggered in, and all of these levels did end up getting ran through. So yeah, I'm going to count that as a one loss, minus 23 handles, and then a break-even trade here. So all good. Moving on to Wednesday, August 23rd. All right, here we are, guys. Wednesday, August 23rd. Coming into silver bullet hour, we see price take out opening range high right here. Right there, opening range high gets taken out. We want to see price market structure shifts lower with strong displacement, giving us a nice fair value gap entry. And let's see if we do get that. Still waiting for that displacement. Still just working higher, guys. Not looking very promising. Looking like we're just going to continue up. So for me, this would have been a no trade day on Wednesday, August 23rd. Let's go to the 24th. All right, guys, here we are, August 24th, Thursday. And one thing that sticks out to me right away looking at this time frame is these relative equal lows down here. So I would want to see this level of sell side be taken before I really do anything. So there we go. We see sell side get taken out. Now we want to see what? Displacement back up. If we have SMT at the lows with ES, you can just use the fair value gap for entry there if you have displacement back up. Otherwise, we would like to see a market structure shift. See what we get. Are we going to get any movement back up? We're just pushing lower. Still just pushing lower. Nope. So again, Thursday, 24th would have also been a no trade day. Last day of the week, Friday, August 25th. We see that price is taking out opening range high. We took out opening range high with very strong displacement. There must have been news on this day. Seeing what price does here, boom, we displace back lower and get a nice market structure shift there. What I would like to see is that price returns to this fair value gap before, keyword, before we take out opening range low. If we take out opening range low, this all goes out the window and I'm looking to get long. So let's see what we get. Price takes out opening range low. Okay, disregard that. We're looking to now maybe get long if we get what we want to see back up. Okay, so waiting to see that. We see price displace up. Not sure if there was SMT or not at the lows at ES at the same exact time. Marking out this fair value gap just for sake of the video. Stop below this fair value gap candle. Opening range, or we'll just recent high, I guess, in this scenario. Let's see if this gets traded back into. It does not. So we see price just continuing to displace up. Playing this out, price took out the high, and now we see price displacing pretty heavy back down into here. Wouldn't be looking to get an entry or anything just yet. Potentially, that same fair value gap could still be used to get long. I would say it's semi-risky just because we're seeing price displace back down in a hurry, but we'll keep it on, guys. We'll keep the same bias on just for sake, of the back testing video. Kind of give you guys a full scope. But I will say this might be a trade you might just want to sit out and just not even bother and wait for maybe PM or wait for a little bit later in the trading day, because yeah, this would be pretty crazy. You've already taken out opening range high. taking out the high twice, taking out these opening range lows, so I do think there is potentially a scenario where maybe you would even look to get short if price came up to this fair value gap. Okay, so just keep that all in mind, but we will play this out and see what we get. Yeah, price just sells right off through there. Kind of expected. We'll see if this fair value gap offers any sort of resistance back down, if it even gets back up there. It doesn't. We just go out and take out this PM session low from previous day. Oh, no, we don't. Put relative equal lows right there. I want to see those taken out. They are. And now would maybe get long if we got displacement back up. And it doesn't look like we will. So honestly, guys, I would mark this. You can mark this however you want. I would mark this as I'm waiting for PM session. I probably would not take this trade, to be honest with you, just looking at this price action, seeing the price displacing both directions, taking out highs and lows. I just would want to stay away personally if I didn't have a clear bias and a clear draw on liquidity. So I'm not going to mark this as a loss. You guys can, again, let me know in the comments if you guys would have taken this. This is August 25th on Friday. And I'm going to mark it as, again, no trade. So this week, back testing this with no bias would have been pretty much 3 back-to-back no trade days. And that's just me being as honest as I can be, with you guys and with myself. So let's get over to the final week of August. All right, ladies and gents, here we are for the final week of August. This is going to be a short week, Monday through Thursday, because Friday was September 1st and NFP. So waiting to see what we get here, folks. Let's see what we get. We're just chopping around so far for this first part of Silver Bullet Hour. Would want to see one of these levels be taken out before doing anything. So that's what I would be waiting for, guys, is to see if we sweep opening range high or low first. There we go. We took it out. Are we going to get any displacement back up? And a fair value gap. Here we go. Maybe right at the very end. Maybe right at the very end of the Silver Bullet Hour. The very next candle, keep in mind, obviously would be the very beginning of the next hour. Just for sake of the video, though, we'll do this. Stop would go below here, 15 points, real nice and easy. Looking to target opening range high. TP1 for sure right here. Maybe you'd go risk-free after you get above these highs right there because it's over a 1-to-1. So let's see what we get, guys. Price taps in and then ultimately doesn't respect that. Chops around some more and then sells off even more. Yeah, so not going to count this as a loss either because this would be taking a trade outside of the Silver Bullet Hour. As you guys can see, even on the very next candle, it didn't tap into it. It was a whole nother candle later. So this is 11:01. If you're following the Silver Bullet rules, this should not be a trade that you are taking, okay? So there you go. Not counting it as a trade. We're counting it again as another no trade day, August 28th on Monday. 28th, no trade. So looking at my journal here, guys, I have 4 back-to-back no trade days, but let's move on to Tuesday. All right, here we are, guys, for Tuesday, August 29th. We see that we start off Silver Bullet Hour by displacing pretty strong through the opening range high. So marking out opening range high right here. And then we've got opening range low all the way down here. So this is the low of the first 30 minutes of market open. That's what opening range is. So from here, I would favor wanting to see price potentially get short if it's looking like it's going to respect, and it's not going to respect. It doesn't look like. So jumping up here in time frame, guys, all I'm looking to do is when I see price not respect these semi or what I would consider significant liquidity levels like opening range high and low, and we displace, I'm then looking at, okay, where's the next draw on liquidity? And looking at this chart right here, regular trading hours, what I believe becomes the next draw on liquidity is this high, because it's the very next high in this chart. So I guess if we were to drop back down to the 1 minute, you could then look to use this fair value gap to target that buy side liquidity if that's offered to us. So let's mark this out. Let's use our gone box, go from the swing low to current high. Let's see where this high actually gets put in at. So right about there, it looks like as of currently. And I would like this fair value gap entry simply because it's below equilibrium. And setting up that entry to see what that would look like right there. Pretty hefty stop loss, guys. Pretty hefty stop loss. I'd want my stop below that candle at least. So I would just bring this down for me personally. I'd get right to consequent encroachment of the fair value gap. Give me a full about 25 handle stop loss. Anything above that, if I miss the trade, I don't even want to be in the trade personally because that's just too heavy risk for me. And I would look to then target there. TP1 at this current high, and let's see what we get. Might not even get it to come back there, unfortunately. So at this point, we're getting so close to that buy side. I'm pretty certain that's going to get taken. I would just delete this order. Wouldn't want to get long from there anymore anyway. And I would maybe get short if that buy side level got taken out before the end of the hour, which it didn't. So again, another no trade day, Tuesday, August 29th. The only other thing that I would point out as a potential, and that's keyword potential trade. Now, these aren't trades that I normally would be super eager to take, but I do know that if you're following the rules of Silver Bullet, you could take these trades. If you notice that price takes a significant level of liquidity and you hold strong like this, we displace through that high or low, and it's obvious that it's not going to yield a reaction. You just see price continuing to displace up, leaving nice fair value gaps. This would have been an area where you could have got long. Why? Because once you saw price displace through that level and not react to the downside, now your eyes shifted to this buy side liquidity level. And I just want to include that in here because this is kind of an advanced concept in terms of your trading, and it's not really a trading style that I prefer to use really that much. It just kind of depends on the day. It's not really the type of setups you really try to find or try to look for, but just looking at this setup, obviously you could have gotten away with this, and I want to just include this in the video as this could have been a valid Silver Bullet entry during that hour. And I just wanted to include that so that way you guys aren't thinking that I'm just disregarding trades that you could have caught in. But it all depends on your experience and your, I guess, belief in your strategy and belief in your draw on liquidity at the end of the day, your bias. So that's how you could have caught this trade. I'm still going to count it as a no trade. However, I just want you guys to know that this would have been a valid trade setup. And the reasoning for it is because once we took out that high, we displaced through it. You shift to the higher time frame because you got to ask yourself, where's price going? That's how you determine a bias. That's how you get your draw on liquidity. Where is price most likely to go? Is there liquidity above or below price? Is there an inefficiency? All the way up to the highest time frame, weekly, daily, right? So it all matters. It all counts. And at this point, once you take out that level, now you're beyond Silver Bullet hour. It doesn't matter, but now you could expect price to potentially begin heading lower, or at least you can anticipate that if you were watching price, right? If we go up to the slightly higher time frames, let's just see if price does indeed start working lower after taking out that high. Looks like it's just capitulating a little bit higher still, and then finally coming into the very next day, you guys can see how price reacts. Okay, so it didn't do anything there, but we'll skip ahead to Wednesday, the 30th of August. Here we are, Wednesday, August 30th. We have one more day after this of the month of August. So we have, first and foremost, marking out our opening range high, marking out our opening range low, which is right down here. And what do we want to do? We want to wait for these levels to get taken out. So boom, one gets taken out right there, opening range high. Taken out once more. Looks like price is starting to still work a little bit higher, jumping out in time frame. Yeah, guys, I don't really see a whole lot that I think price wants to draw for. So I would just wait and see if price does offer some displacing price down and a nice market structure shift. So right here, looks like price is starting to work down, and we get that market structure shift right there, shifting below that low. Let's jump out here in one time frame. Let's go to the 2 minute. And what I want to do, guys, obviously we have a fair value gap right here, which could be an entry to get short. What I would like to see is if one more candle close, do we get a fair value gap? Yes, we do. So we do get a fair value gap there. This would be where I'd like my entry because it does overlap this order block. So what I would like to do, let's drop down to the 1 minute again. What I would like to do is have my entry be in alignment with that. Just extra confluence. I'd like to get short there. I am remembering this. I'm remembering this trade now because this is obviously our previous week that we just traded. Give you guys a little bit of a Spoiler alert, this does just leave without us. So just so you're aware. And then I would look to target opening range low, 90 points. You guys can watch what happens. Price just dumps and doesn't offer a chance to get in. But at this point, I'd delete the trade. Or you'd want to delete the trade because target was hit. And at this point, you are now waiting for the same thing in reverse. Go for value gaps. Not giving a whole lot. See if there's a fair value gap on the smaller time frames. There is on the 2-minute. And there's another one right here. Would like us to obviously be in an area of discount. Price does pull back into this higher up fair value gap. And then ultimately does push up. But, you know, looking at this, keeping the silver bullet context in mind, this would have been not a trade I would have taken because we did not get any sort of a pullback, you know, into our area of discount. So I would not get long there. Silver bullet hour has ended. So this would have been a no trade day on the 30th. A lot of no trade days, guys, to end the month of August. During AM silver bullet hour, plenty of opportunities, probably PM session. But just going off of just AM session silver bullet hour on NQ, this is what we are up against. So let's go check the very last day of August. All right, guys, last day of August here, day before NFP. And right away at the beginning of silver bullet hour, we see price take out opening range high, which was the high of the first 30 minutes of market open. So we see price take that out right there. And now we would want to see if price does start displacing towards opening range low. And we do. We get price displacing through, and not really a whole lot of a market structure shift, to be honest with you guys, but we do have a fair value gap. The only way you would take this trade is if you have bearish SMT at the highs, okay? So if you have bearish SMTs at the highs, you could take this trade. If not, you're not taking this trade. So we're going to keep that in mind, looking to target that. Let's see what we get. Price does tap into that fair value gap. Ultimately, no respect. And then pushes up, okay? So price pushes up higher. And still, we're taking out these buy-side levels, so would want to see price, you know, displace back down. Again, the only way you're taking a trade short is if you are having bullish SMT or bearish SMT at the highs between ES and NQ. Still not seeing any of these gaps respect, so I would not feel confident putting another short position on. You know, I want to see a bearish PD array hold and respect before doing so. And here we see price finally starting to displace lower. This is the first bearish fair value gap that actually held and then pushed price lower. But as you guys can see, it would have been the only opportunity to get short. And then from there, price does come all the way back to entry again. So to me, I think that you can't really count this as a short. I would have taken the short. If anything, would have been short here and got stopped out. It would have been right there. So I guess if I were to put that trade back on and just count it for sake of the video, we are looking at about a 15-point stop loss there. So last trade of August would have been a loss minus 15 points. So that leaves the overall August record for AM session, silver bullet hour, NQ only, with no bias included. Win-loss record, terrible. 4 wins, 10 losses. But the risk to reward is what is going to be the saving grace for this backtesting and for the overall performance of August, which is that we had 310 handles won on the winning days. And then on the losing days altogether, 198 handles lost. We did have quite a few no trade days, over a handful of no trade days inside of this month. Just looking at, you know, again, the one index, and our net gain was 112 handles. So all in all, August very well could have been a profitable month if you were simply just trading NQ with no bias, just using the AM silver bullet hour. But would it have been a hard month? Yes. Would you have taken a lot of losses? Yes. Is August a hard month in general? Yeah, I would say it is. And if you guys are new to trading, you know, just know that I would say July and August price action, it is a little bit more improbable And these are months where it is a little bit more difficult, at least in my experience. And I also had a rougher month of August personally. I actually had my first red month of the entire year in August, basically because I had 2 red weeks. So I had 2 red weeks in August. I had one break-even week, and then I had one slightly green week. So therefore, I had an overall red month in August, first red month of the year. Hopefully, it's the only red month of the year. And, you know, I know it was a struggle for me, and I know that you guys see my live trading videos every single day on YouTube. So if you guys are keeping up with that, awesome. But yeah, just so that you guys get a good picture of like what August was like and how your thought process could have been going into each day, each trade, and why you took each trade, or maybe why you didn't take a trade. So let me know if there was any days where you guys would have done something different. Again, this video is a very cookie cutter example of using the silver bullet strategy, because we're not including daily bias, we're not including draw on liquidity, we're not including any of that type of stuff. We're just simply going off of what we're seeing during this silver bullet hour, and we only were looking at AM session for this video. Was not looking at PM session at all. So I just wanted to include that tidbit in there, guys. But hopefully you guys enjoyed this video. If you did get any sort of value from this, if this was helpful for you guys to have us go through the August month together, if you enjoyed it, would really appreciate a thumbs up and a subscription if I've earned it. If not, all good. Otherwise, I am very excited to get into fall price action and to these fall months and get out of the summertime price action, because yes, it was a little bit of a struggle and a challenge for myself personally. But hope you guys enjoyed. I'll see you guys in the next one. Peace out.